There is a specific number that explains exactly why your grocery bill is doubling, why the bond market is crashing, and why the money in your savings account is losing value every single day. That number is 6. 6 is the number of times Donald Trump's companies have filed for Chapter 11 bankruptcy. Now, usually when we talk about this, it's framed as a political attack or a punchline. But if you care about your financial future, you need to stop laughing and start paying attention. Because for the first time in history, the king of debt isn't just running a casino in Atlantic City. He is running the United States economy. And if you are holding US dollars, if you have a 401k, or if you earn a salary in this country, you are no longer just a citizen. You are an investor in his 7th massive venture. The question you need to answer right now is, do you know how the previous 6 movies ended? Because if you don't understand the playbook he used back then, you are going to be the one holding the bag when the credits roll on this one. We are living through a fundamental shift. You can feel it. The old rules of economics production, savings, fiscal responsibility, have been thrown out the window. We have entered what I call the casino economy. In a casino economy, stability is the enemy. Volatility is the feature. And growth is fueled entirely by massive, unsustainable, eye-watering levels of debt. Donald Trump has famously said, "I'm the king of debt. I love debt." And to be fair, in the corporate world, his strategy works. For him, he borrows billions, builds massive projects, extracts the cash, and when the bill finally comes due, he restructures. He utilizes bankruptcy protection. He protects his personal wealth, while the banks, the contractors, and the shareholders take the hit. It is a ruthless, effective strategy for a CEO. But here's the terrifying reality we are facing today. You are not the CEO. In this national version of the casino, you are the shareholder. You are the unsecured creditor. When the United States prints trillions of dollars to service its own debt, they aren't taking money from the elites. They are diluting your labor. They are stealing purchasing power from your paycheck. We are currently in a situation where the U.S. government is borrowing money just to pay the interest on money it borrowed yesterday. It is a spiral. It is the exact same financial death spiral that took down the Trump Taj Mahal in 1991. The mainstream media treats these bankruptcies like ancient history. They say, that was 30 years ago. It doesn't matter. I am here to tell you that it matters more today than ever before, because human behavior rarely changes. The same psychological pattern that drove $1 billion casino into the ground is now driving a $38 trillion economy. You might be thinking the U.S. is too big to fail. They won't let it crash. That is exactly what the bankers said about the Taj Mahal. They called it the 8th wonder of the world. They said it was mathematically impossible for it to lose money, but it did. To understand how to protect your money in 2026, we need to go back to 1991. We need to open the 6 Bankruptcy Playbook and look at the receipts. Because the warning signs blinking on Wall Street today are the exact same ones that were blinking on the Atlantic City boardwalk right before the collapse. Let's look at the evidence. Most people think bankruptcy is a failure. For you, the high-earning professional, the doctor with student loans, or the corporate manager with a mortgage bankruptcy is the ultimate nightmare. It means losing your reputation, your credit score, maybe even your license to practice. It is the end of the road. But in the world of high finance, and specifically in the world of the king of debt, bankruptcy isn't a failure. It is a tool. It is a financial instrument, just like a stock or a bond. You see, there is a myth that the economic chaos we are seeing right now is just an accident, that it's just bad luck or incompetence. But what if I told you that pushing the system to the breaking point is actually part of the business plan? To understand where the American economy is going in the next 2 years, we have to look at the receipts. We have to look at the 6 Bankruptcy Playbook. Yes, 6. We aren't talking about a one-time mistake during a bad recession. We're talking about a systematic pattern of behavior spanning 3 decades. Let's run the list. 1991. The Trump Taj Mahal, 1992. Trump Castle, 1992. Trump Plaza and Casino, 1992. The Trump Plaza Hotel, 2004. Trump Hotels and Casino Resorts, 2009. Trump Entertainment Resorts. Do you see the pattern? It's not random. is a cycle. Leverage up, cash out, crash, and restructure. But I want to focus on just one of these, because it is the perfect mirror for the United States economy right now. Let's talk about the Taj Mahal in 1990. They called it the eighth wonder of the world. It was massive, gaudy, and expensive. It was supposed to be a money-printing machine. But underneath the gold plating, the math was rotten from day one. And you, being the smart, analytical person you are, you will appreciate this math because it explains exactly why you feel so squeezed right now. To build this massive project, Trump couldn't get normal loans from conservative banks. They looked at the numbers and said, "No thanks, this is too risky." So what do you do when the responsible lenders say no? You go to the risky ones? He financed the project using what are called junk bonds. Think of these like a credit card with an insane interest rate. He was paying 14% interest on hundreds of millions of dollars. 14%. Now imagine running your household budget like this. Imagine you have a massive mortgage, 2 luxury car payments, and private school tuition. And you are financing all of it on a credit card with 14% interest. The math was brutal. Just to pay the interest on that debt, not to pay down the principal. It's not to pay the staff. It's just to pay the interest. The Taj Mahal needed to bring in $1.3 million every single day. Every single day. That is the definition of living on the edge. If they had a slow Tuesday, they were underwater. If there was a slight recession, disaster. And that is exactly what happened. The economy slowed down, the revenue didn't hit the target, and the house of cards collapsed. But here is the part that should make you angry. This is the part that proves the game is rigged against people like you. When the Taj Mahal went bust, who lost money? Was it the CEO? No. The contractors, the small business owners who installed the windows and laid the carpets they got? Pennies on the dollar. Some of them went out of business. The investors who bought the bonds lost their shirts. But Donald Trump, he didn't lose his personal wealth. Used the bankruptcy court to restructure the debt. He gave up some equity, sure, but he stayed in the game. He shifted the pain onto everyone else. He proved that if you owe the bank $1 million, you have a problem. But if you owe the bank $1 billion, the bank has a problem. He leveraged the system to privatize the gains and socialize the losses. He used debt as a weapon to build an empire, knowing full well that if it blew up, the blast radius would hit everyone except him. Why am I telling you a story about a casino from 30 years ago? Because right now, the United States of America is the Trump Taj Mahal. We are operating on the exact same math. We have maxed out the credit cards. We are borrowing from lenders who are starting to get nervous. And just like that casino in 1991, we have reached a point where the cost of our debt is starting to eat us alive. You might think comparing a country to a casino is an exaggeration, but let's look at the interest rates. Let's look at the terrifying reality of the U.S. federal budget right now. Because if you think 14% interest on a casino was bad, wait until you see what we are paying to keep the lights on in America today. You might be telling yourself, okay? That's a crazy story about a casino in the 90s, but the United States government isn't a gambling hall. We are the world's superpower. We have the military. We have the printing press. It's different, is it? Because if you look at the raw numbers, stripping away the flags and the speeches, the balance sheet of the United States today looks terrifyingly similar to the balance sheet of the Trump Taj Mahal just months before it filed for Chapter 11. You need to understand one thing. In the world of finance, junk status doesn't just mean a company is bad. It means a specific mathematical reality. It means your income is no longer enough to reliably cover the interest on your loans. In 1990, Trump was paying exorbitant interest rates to keep his casino alive. Today, the United States is doing the exact same thing, just on a scale that is almost impossible to comprehend. Here is the statistic that should keep you awake at night. For the first time in history, the United States government is spending more money just to pay the interest on our national debt than we spend on our entire national defense. Think about what that actually means. We're spending more to pay off the banks and foreign creditors for money we already spent than we are spending to protect our borders, our soldiers, and our future. If you ran your household like this SIF, you earned $100,000 a year, but you had to send $50,000 of it to Visa and MasterCard just to cover the minimum payments, you would know exactly what you are. You aren't leveraged. You are broke. This is where the system skeptic inside you needs to wake up. Because when a country reaches this point, the risk-free asset, the U.S. Treasury bond, stops being safe. It starts looking a lot like those junk bonds from 1991. And just like in 1991, the lenders are starting to notice. In the casino story, the lenders were banks. In our national story, the lenders are countries like Japan and China. For decades, they were happy to hold our debt because they believed the U.S. was good for it. But remember the headlines we talked about? Japan is selling, China is selling, the banks are cutting up the credit card. They are looking at the casino, looking at the drunk management, and saying, I want my chips back. So, who is left to buy the debt? Who is left to keep the lights on? This brings us to the most dangerous part of the parallels. In the business world, when the banks stop lending, the CEO has to face reality. But in the casino economy of a nation, the government has a cheat code that Donald Trump didn't have in 1991. They can print their own money. They can create liquidity out of thin air to buy their own debt. It's called monetizing the debt. It sounds technical, but it's actually a sophisticated form of theft. Imagine if the Taj Mahal could have just printed its own casino chips and forced the contractors to accept them as payment. That is what is happening to your salary right now. Every dollar they print to keep the casino running dilutes the value of the dollars in your pocket. It is a hidden tax. It is the reason why you can make a high income and still feel like you are drowning. You are swimming upstream against a flood of fake money printed to save a bankrupt system. But here's the catch. This cheat code has a limit. You can only print so much before the entire illusion shatters. We are approaching the end of the line. Interest payments are eating the budget. Foreign lenders are walking away. And the only tool left in the box is the one that destroys the currency itself. So if we know the casino is insolvent, and we know the lenders are leaving, what does the king of debt do next? Does he fix the spending? Does he tighten the belt? No. If you look at the playbook, you'll see that he does something much more aggressive. He prepares for the reset. And if you aren't prepared for it, this next phase is going to wipe you out. Let's talk about how the house plans to survive the crash and why they need you to stay at the table until the very end. If you owe a bank money and you can't pay, the bank comes and takes your house. That is called a hard default. It's painful, it's public, and it's messy. But when a government owes money and can't pay, they don't let the bank take the house. They don't admit defeat. Instead, they do something much more devious, something that drains your bank account without ever touching your login credentials. They choose the soft default. And if you are sitting on cash, bonds, or a traditional salary right now, you are the one paying for it. So how does the king of debt escape a $38 trillion hole without officially declaring bankruptcy? He does exactly what he has publicly said he wants to do. He devalues the dollar. Think about it. If the U.S. government owes $38 trillion and they intentionally make the dollar worth half as much through inflation, then effectively, they only owe $19 trillion in real value. They pay back their debt with money that buys less stuff. For the government, this is a genius magic trick. It wipes out their debt burden. But for you, it is a catastrophe. This is why you feel like you are running on a treadmill. This is why high earners feel broke. When they devalue the dollar to save the system, they are essentially reaching into your pocket and shrinking your paycheck. You might still get that 3% raise this year. You might feel good about it. But if the cost of living, the real inflation, not the government numbers, it was rising by 8% or 10%, you didn't get a raise. You took a pay cut. This is the rug pull. In the casino economy, they don't stop the game when the house is losing. They just dilute the value of the chips. Donald Trump has been very clear about this. He prefers a weaker dollar. Why? Because it helps exports and it makes servicing debt cheaper. It is the classic Chapter 11 move applied to a currency. But here's the danger for the high-functioning professional. You have been trained to save cash. You have been trained to buy safe bonds. You have been trained to trust the currency. In a soft default, those safe habits are exactly what will destroy your wealth. Cash is not a safe haven during a currency reset. It is a melting ice cube. The wealthy are the people who actually understand the king of debt playbook aren't holding cash. They are holding assets. They are holding things that reprice when the dollar drops. So, the terrifying question is, if the dollar is being sacrificed to save the sovereign debt, what happens to you? Do you go down with the ship, or do you grab a life raft? The difference between the people who get wiped out in the next 2 years and the people who build? Generational wealth comes down to one simple concept: leverage. It's time to stop playing the game like a victim and start playing it like the house. Let's talk about how to Trump-proof your portfolio and turn this crisis into your exit strategy. So, how do you survive a soft default? How do you protect your family when the king of debt decides to dilute the currency to save the casino? You have to stop thinking like a saver and start thinking like a debtor. I know that sounds completely backward. You have been taught your whole life that debt is bad, that debt is slavery. And for consumer debt credit cards, car loans, that is absolutely true. That is bad debt. But in a high-inflation currency debasement environment, good debt is the most powerful tool you have. Think about the math. If inflation is running at real-world rates of 8% or 10%, and you have a fixed-rate mortgage at 4% or 5%, you are effectively being paid to borrow money. The bank is losing purchasing power every year, and you are winning. This is exactly how the government plans to get out of its $38 trillion hole. They are going to pay back their bondholders with cheaper, devalued dollars, and you can do the exact same thing. The strategy of the wealthy during a currency reset is simple: own real assets and finance them with long-term fixed-rate debt. When I say real assets, I mean things that cannot be printed. I mean scarce, finite resources: gold, silver, Bitcoin, strategic real estate, commodities. These are the things that reprice higher when the dollar falls. Right. When you see the price of gold hitting record highs, it's not because gold is becoming more valuable. An ounce of gold is the same as it was in Roman times. It's hitting record highs because the dollar you are using to buy it is becoming worthless. Here is your checklist to escape the trap. First, stop hoarding excess cash. Beyond your emergency fund, cash is a liability. It is a guaranteed loss of purchasing power. You are working hard for money that is melting in your hands. Second, look at your debt. If you have low-interest fixed-rate debt, do not be in a rush to pay it off early. I know that feels wrong psychologically, but mathematically, you are shorting the dollar. Let inflation pay off your debt for you. Third, start accumulating hard assets. You don't need to be a billionaire to do this. You just need to stop saving in fiat currency and start saving in value. The casino economy is entering its final, most volatile phase. The king of debt is running the show now, and he is going to use every trick in the bankruptcy playbook to keep the game going. He will print, he will devalue, and he will restructure. Most people, the ones who trust the system, the ones who leave their money in a savings account, are going to get wiped out. They will wake up in 2 years and wonder why they can't afford their lifestyle anymore. But you have seen the playbook. You know how the movie ends. The house always wins. That is the golden rule. But for the first time in your life, you have a choice. You can keep playing the game as a victim, hoping the rules become fair. Or you can look at the math, position your assets, and finally, become the house. The choice is yours. Class dismissed. The most dangerous addiction in a casino isn't the gambling itself. It's the belief that luck will eventually turn in your favor just because you've been losing for so long. The United States government is betting on luck. They're betting that they can print their way out of a debt crisis without consequence. But you don't have the luxury of betting on luck. You have to bet on reality. If this video made you uncomfortable, good. That means the system skeptic in you is finally paying attention. I want to hear from you in the comments. Do you think the US will attempt a soft default through inflation, or are we heading for something much worse? Let me know your theory. And if you want to be the one building the lifeboat instead of sinking with the ship, make sure you are subscribed. We don't do sugar-coated financial advice here. We do the math. I'll see you in the next one.